you'd probably need 50 million rand. Okay, a 50 million rand retirement fund to go and see it out in Mauritius and watch the penguins, right? If you and we just don't have that. How much does it cost to retire? Before we come into this, let's just talk a couple of sustainable resolutions. Now, I know you guys are a long way off retirement. Okay? I'm 10 years off retirement. Okay? How much money do I need to retire? How do I work that out? Do I have to go to an actuary?
No.
Okay, so how much money do I need to retire?
Huh?
Huh?
It depends what your retirement plan is.
That depends on what my retirement plan is. So let me tell you, show you. This is what we are up against. Just to start you off and get your attention on a Sunday morning. Yeah? I don't know, it's disappeared. I didn't have it. I haven't got it, yeah. It doesn't matter, I can work without it. But let's have a look at this and say, I am now 55. Okay, I am lucky if I'm going to be able to work to 65. Okay? I might be able to do that because I can't bank on roads. I don't know what's going to happen here. Will the university be able to pay its salaries within a year? We don't know. Okay? I'm quite lucky in that I have a lot of other financial interests and external interests, so I have another way of carrying on working. When I get to 65, I've got to have money to live on. And so, how much do I need to live on per month? Sorry? When you're retired. Now, the idea should be, when you are retired, if the pirates invented retirement, right? You dropped somebody on an island, and you supported that person by giving them enough rum to drink themselves to death within a year or two. That was the first retirement fund, actually. Now, Lincoln, that's the history. The first people to do retirement, that the young support the old, were the pirates. Drop somebody on an island with enough grog. Okay, real Johnny Depp's dad stuff, right? One person. So now what we say is at retirement is a second times 2. Most people, it's 2 pensions. Okay? And most people, the life expectancy of the female in the relationship is a lot longer than the male. Okay? So, you are saying I have to provide a pension for 2. Right. So now, I say, okay, well, if we go and live really conservatively, I need, after tax, to pay all my bills, run my car, bit of bingo, basic South African lifestyle. I would put at a minimum 30,000 a month. If I want to keep my house, my dogs, feed the dog, maybe 1 or 2, but not 4 like I've got at the moment, that sort of thing. Downsizing of it. But that 30,000 rand a month is after tax. And we do tax pensions.
You're assuming all your assets are paid, your house is paid.
Yeah, everything's paid. The house is I'm going to show you in a moment, is a liability. But the more I'm still a taxpayer until I die. So the pre-tax requirement on that is, let's say, 50. So let's say I need an income stream of 50,000 rands a month, because the first 5,000 is going to go on just the medical aid. then there's the tax, then there's the house, then there's the utilities. 50,000 is not a big retirement. Right. How much do I need in a pension for two to maintain growing with inflation 50,000 rand per month in my retirement? How much cash? Let's have some guesses. 80 million. 80 what? 80K? No. I've got to have a 50,000 rand a month inflation-linked pension that has got to last the longer of the life expectancy of me and a spouse. Have a guess what that would cost, and then I'll show you how to calculate it. Answer?
What are we assuming interest rates are?
Probably about 10 million, 10, 15 million.
Who said 10 million? Fuck me. That's bloody good. On the dot. 10 million rand cash. I'm not talking about my house. I'm not talking about my cars, my boats, my dogs. They must all be paid off. And I must have 10 million rand just to see it out, maybe for 20 years. How do you work that out? There is a rule of thumb that for every 5,000 rand per month that you require in retirement, 5K per month, you need 1 million rand for retirement capital. So, I'm wanting 10 lots of 5,000. 10 times 1 million is 10 million rand cash. With no liabilities, house paid for, everything else. So what's the problem? Okay. Let's put a little bit of extra thought into this because it's very important in your life. Right, now, taking that, where do South Africans go wrong? What's the first thing that goes wrong with that? Huh?
Nobody's got that much money.
Nobody's got that amount of money. Nobody. Very, very few people have got 10 million. To give you an idea of the best estimate of it, the number of US dollar millionaires in South Africa, including their properties, and that is the universal definition of what is wealthy. 1 million US dollars. 15 million rand. Net worth. In South Africa, it is estimated that there are 40,000 in the entire population. So you're saying out of 56 million people, 40,000 can afford to retire. How's that? Are you frightened? Are you going to buy a retirement annuity tomorrow? Today? Okay, now, does that frighten you into buying something? I don't know what we're doing here and frightening people. Okay? Or is this idea that you're carrying a surfboard and everything's cool in retirement going to make you buy it? Okay, but now, and this is where this book goes and how frightening it gets. What are the two biggest fuck-ups that everybody makes in that? Number one, I'm going to live in my mansion in retirement. I'm not moving, I'm staying here with my dogs. The value, so now, look at it this way. If you work out the utility costs on a house, your rates and taxes, your insurance, your DSTV, your dogs, the da-di-da-di-da-di-da-di-da, right? And you will see that to run a home, just the cost of keeping the doors open on your home, $10K per month. Right? But that's in after-tax money that you're paying it. So now, to keep the house, I need 15 million pre-tax. Right? Which is how much capital? 3 million rand in my retirement fund just to keep the house. So is the house wealth? No! Because the more wealth I have, the more wealth I have to maintain it. And nobody understands this. Okay, they all have this thing. There are some pensioners in South Africa today with a retirement fund and they've got 3 fucking properties. And they wonder why they're going backwards. It's absolutely extraordinary what people are doing. And what's the second error? What's the second biggest error in retirement planning in South Africa?
They all start saving too late.
That's the fourth one. I'm talking about people who've already retired. What's the next biggest mistake? Begins with a P and it ends with an ism. Patronism. We want to support our kids. Okay, so if you just look at this problem. 20 years ago, the lead American sitcom was, one of them was called Empty Nest. An old widower was sitting in his house and his kids had fucked off. And remember the Cosby Show? Thea, go to the army, go to university or go get a job, but the common word is go. Right? That was 20 years ago. And you ask the students, not you guys, but other students, where are you going to go after you've got your degree? And I look at you and I say, what are you talking about? I'm going to live with mom and dad. I do, of course. What are people doing? They can't downsize, they've still got their kids. Okay? They're paying for their grandkids. Out of a pension. St. Andrews, it's going on across the valley, right while we speak. About 20% of the kids that are there are paid for by grandparents. Why do you think they have granny days at private schools? The grannies are paying the fucking bill. Out of the retirement plan after tax. And when you look at some of this stuff, you say to the kids, I say this to the kids, do you know what you're going to inherit? And they say, what? Your parents. Without any money, we're here. Okay? Now this is the stuff that's all going to be in the book, okay? Is the hard reality, which you are seeing more and more of in South Africa, that there's no plan except going to the shopping mall and buying another car. It's a change in lifestyle, it's a change in approach, the sustainable family is what we're looking for. Okay, but the marketing people say we can't sell that. I believe you can. But when you see the lunacy, the craziness in South African families, that's what we're trying to get to with this project here, is what people are doing in driving themselves absolutely bonkers. Crazy. And, some of it is outside of your control. I've got 2 grandchildren called Money and More Money. Okay? And so what you get is, Dad, I can't afford to send these kids to school. So now you get to the dilemma. Do you give them the finger? Or do you say, well, I've got to pay? And half of what's across the road here is grandparents saying, I can't let that go to a government school. It's got to get educated. Half are doing it for snob value. I mean, you drive through Newlands in Cape Town, and you see everybody driving their kids off to Bishops and all of these places in a fucking Range Rover. Now look up on AA rate how much per kilometre is it costing them to just take their kids to school. Okay, they're not thinking. They are just not thinking. But then you've got to take it to the other hand which what Piketty says is the solution is education and technology. It's not gold in the ground, it's not coal. It's an intangible. We got a message yesterday afternoon from the Vice Chancellor of the Business School. Please, we are now commissioning the Rhodes Business School to look into sustainability of the university. Now, I don't know what that brief entails. Is that say, well, we must be more environmentally friendly? You know, and stop using pest control in the gardens and things like that? Or does that mean we have to get into the very marrow of the problem of fees must fall? Because Rhodes University is the second most dependent university on student fees in South Africa. Only UNISA is worse than Rhodes. We are in a crisis, sustainability crisis here, on fees. Nobody can afford to be here. We are a tiny university with a bunch of drunks as alumni who won't give us any money. Sorry, I'm being no disrespect to alumni. But we don't have.
Sorry, disrespect to drunks as well.
If you go to a Rhodes reunion, they used to have it at the Parkview Golf Course in Johannesburg, and you'd go there, and well, I was at one in Cape Town 2 years ago at the Slug and Lettuce down in Newlands, and I noticed everybody was arriving by Uber, and I thought, this is going to be big, right? And you walk into the place, and we've arranged a special. A double vodka and Red Bull for 20 Rand. Provided you buy two at a time. So now everybody's walking around two of these things. So it's not very stylish to walk around with two drinks. I mean, you put one down. So this one lady comes up to me, I say, would you like a drink? She says, sure, fine. So would you like another one? And the whole evening degenerated into Rat and Parrot. Extraordinary version of it. With everybody when they'd had enough using Uber to go home. This was in the middle of the fees must fall crisis. And you wanted to say to them, look, come, help us. Help us do this. Let's rebuild this thing. It's got every potential. We should be listing it as a company. And it just, no. Absolutely incredible what was going on. And these are the real issues. How can you expect the cost of an undergrad at Rhodes, 100,000 Rand a year? Where's that money supposed to come from? I don't know. But we can do it. So that's sustainability. And that's what that project is about. Put it straight in your face. Stop hiding behind a wall and pretending that nothing's wrong. Look at the queue at the auto teller on Grant Day. Why is everybody, here's a question for you. Why does everybody stampede to the auto tellers on Grant Day, where you see a queue sometimes 50, 100 meters long? Why don't they just go the next day?
Because they're out of money.
No, they're not worried actually if there's no cash. You know why you have to get there on Grant Day? To transfer your money into another account before the stop orders go through to all the loan sharks. That is the way that you cheat the loan shark, Edgars and everything else. Is that when they put the stop orders are returned, no funds in account. Try again next month. But you've got to get there before the next morning, or when you put your card in, fucked. Okay? That is one of the principal reasons. You can look at it, I think it's on this website, on Critical Thought. It's definitely on BizNews. African Bank, the disaster of African Bank, where the financial director in an interview wrote, "Fuck the poor." Okay, did you see that last year?
What happened to him?
He's retired with his Bentley. But if you look at that, that's what he's saying about his customers. That's why they went to African Bank. And what he said it in the frustration of the bad debt factor of African Bank, that nobody would make any effort. Why won't they make any effort? They weren't getting a fair deal. They weren't educated in the use of money. If you borrow 1,000 Rand from a loan shark, what is the standard repayment term? Do any of you know? How many of you have been to a loan shark?
I know some people who own aircraft who all own these loan shark businesses.
Loan shark businesses, right. The return is you get 1,000 Rand
2,000 Rand.
and you pay back minimum 1,600 over 3 months. Minimum 1,600. Okay? And you have to have a pay slip. Why? Because the banks didn't do it. Anyway, that's enough. Right, next up is the income tax in South Africa. Hey, somebody's fallen asleep already. Wakey, wakey. Right, income tax in South Africa. Now, we are approaching this all day from the perspective of you don't have to be an expert on tax, okay, to manage tax. We are going back to section 76 and we are saying we are MBAs, we are business administrators, we are not making tax nerds in this lecture theatre. You hire tax nerds. Pravin Gordhan's absolute brilliance in running SARS was recognizing just that. I hire tax nerds and I manage them. I can hire rafts of them. Each one a specialist in his own field. I don't need to be the tax expert. You should have seen it one day. I was lecturing for Gordhan, lecturing for SAICA, South African Institute of Chartered Accountants. 400 people in a seminar facility out on the East Rand. And it just happened that Pravin Gordhan was at the same facility that day. And he sent a message, "Can I come and talk to the people in your lecture?" I thought, wow, this is great. And Pravin Gordhan just walked into the lecture. It's about 10 years ago. And he made a few remarks. He says, "Are there any questions?" So, of course, some CA comes along and asks a massively technical question about offshore investment. And Gordhan just looked at him and said, "You must be joking. Matthew will answer that question later." Which was a brilliant answer. I don't know the answer to that. I will get back to you. I will manage that answer. And that's the whole approach that I want you to take with tax as we go along. So we are saying, go back to your standards of conduct. You are saying you have to act in the best interests of the company. Okay, you are entitled to delegate, and importantly, you have got the right to use nerds. So what we've got to say is, if you've got that, what basic knowledge do you need to manage a nerd? Okay? So you then start with the basic knowledge starts with, very importantly, the types of taxpayers in South Africa. So, please, can somebody turn that down? Okay. Types of taxpayers. So we say, when you start a business, you are an individual or sole proprietorship. There is no tax regulation that says you have to have permission to trade. Anybody can trade. We'll deal with registration issues later. And you might start off as an individual, or when two individuals work together, they are partnerships, and partnerships is all that you do is that you split up the profit in profit sharing ratio and you report it in the individual partner's tax returns. Then there are trusts. We will talk about trusts a little bit today, just so that you have the most basic understanding. South Africans are obsessed with trusts, mainly from their personal financial planning perspective. We don't often trade through trusts, but we'll have a brief look at that. Most of the time, we are dealing with a company. Company has its own tax rate, and the exception to that rule is that there is an exception for what's called a small business corporation. There's a tax concession. A small business corporation gets taxed on a more favorable basis than a company. Right, that's the taxation of entrepreneurs. And then all of them are entitled to use, if their turnover is less than R1 million a year, a thing called turnover tax, where you're not required to keep books and records and everything else. You just are responsible for paying a little bit of tax based on your turnover, not your profit. We'll see how we go with that. So you start off with what type of tax entity are you dealing with. That then leads to the tax rates. Now, what can you tell you about the individual? Okay. I am not a company. I have a lot of consulting interests outside of Rhodes University. I'm a part-time member of staff. Do I run a company? No. I am not a director of any company, and I'm not a trustee of any trust. In the modern corporate governance, I've said, count me out of that. I'd rather wash your car. Okay? In my own work, I am taxed as an individual. I have one tax number, one tax return per year, plus 6 VAT returns a year. Okay? Why? It's simple. I don't have to have board meetings. I don't have to have separate financial statements. I don't have to have additional tax returns and provisional tax returns. So I'm running from a socially unacceptable position that the perfect business has no stock, no staff, no clients. I've achieved 2 of the 3. Okay? That's why we're going for internet lecturing. Then there are no clients either. You just use it. Jokes aside, keeping it simple. And the mistake so many people make with tax is the moment that they start their business, instead of concentrating on making money, they concentrate on saving tax before they've made any money. You know, people come to me often down at Kenton. I need to talk to you about a tax. I'm going to establish a business. So just get on with it, okay? So there are some tax advantages for the individual. Disadvantages, right? Your biggest disadvantage in not setting up a company is that people don't like it, okay? They would prefer to deal with companies. Other than when they're dealing with professors, they think that's quite cool. They'll take a bill from me personally. They don't need a company. But there is a risk. If I get sued in my business and I'm not insured for it, I lose my house and everything that I've got except my retirement fund. Okay? So you have to look, when you get people who are taxed as individuals, you have to look at it and say, watch out for your liability, that you are not sued personally. But it's not necessarily going to solve the problem by forming a company if you're not going to run the company reasonably, because then you can be sued as a director or shareholder of that company. Okay? So I don't need limited liability. Why? I don't dispense advice. I do lectures. You can't sue me for giving a cuck lecture. You can throw a tomato or not pay my bill, but you can't sue me for it, right? That's one of the reasons I do it. If I write a tax opinion and it's wrong, well, hell, all hell breaks loose. I don't want to do that. I'd rather come and talk. I say to my clients, you can phone me. I don't charge for phone calls, unlike attorneys. Ask me to put pen to paper. Different risk profile. Okay? And the other disadvantage to what I do in my business is that when I die, there's nothing left. I haven't got an exit wealth creator out of my own business. I tell stories. When the stories stop, that's it. Okay?
No succession plan.
Exactly. Absolutely. You've got no succession plan, Matthew Lester. A lot of people tell me that. Okay? No succession plan. I say, I got a will. It says feed the dogs. Okay? Now, and you can have a hell of a lot of fun with that concept. Can I leave my estate to my dogs, incidentally?
Yes.
Oh. You would have a terrible problem if you tried, if somebody wanted to contest that. But I can leave my estate to a trust with an instruction that it must pay for my dogs and everything that they can have. And when they are all dead, my daughter can have them, which means she's going to take them to the vet. Okay? But there are ways of doing that. Okay? Right. Which leads us on to the thing on the standards of conduct. When you're working with a company, you have to believe in your tax decision that you have acted in the best interests of the company in tax. On an act, the Income Tax Act alone is 700 pages long. The VAT Act is probably another 300. You can't know it, right? So we make our standards of conduct working on the basis, when you get a tax problem in a boardroom, you've got to work around the framework of Section 76 of how do I get to the bottom of it. So call the tax nerd and they come in there and they come in with acronyms. GAR, BEPS, PAYE, VAT. And before you know it, you don't understand a damn word that they're talking about, right? That is the wonderful world of tax nerds. Okay? How do you communicate that through a board? How do you manage that risk through a board? So we go and we say, right, let's look at the different entities. And we say, right, individual or partnership. There are the advantages, we've done them, and the disadvantages. We can say, if you want to start a street corner business, you go to the 6th schedule of the Income Tax Act, which is what's called turnover tax. And what that will do, we will see later. Or you can hook up with partners, and we have a profit sharing agreement. Why don't you ever have a partnership? If you say to me tomorrow, should we go into partnership? Why?
If you make a mistake, then I might pay for it.
Yes. Okay. You're jointly and severally liable for the actions of your partners. So you can be asleep and one of your partners fucks up and you're going to pay. I couldn't live with that as a partner of an audit firm. I lived with it for 2 years and I thought, nah, I'm not into this movie, and I got out. Okay? Because any mistake by any partner can take you out. So watch out for that. That is the biggest reason. In fact, the risk profile on a partnership is so high that you say, well, you know, there should only ever be one partnership that you consider in your life. No, marriage. Those are unavoidable. Some of us do it once and never again. Others, you know, they bear it out. But you keep it for that. Okay? So you are responsible for the acts of your partners. Watch out for that. So now we go to personal tax. Now, going to the movie we're going to talk about. What is my client base? My client base is 1 million South Africans out of 56 million who earn more than 500,000 rand a year. I don't have a hell of a lot to say to the rest. Okay? I can do some stuff that talks to the rest about how we can make a start on this. But what do you say to that person who's already paying 63%? What do you say to him about his tax? How do we deal with that? Okay? There is the tax tables. We've already done the story about Nene, what he believed in spreading it wider. Then we had Gordon, and then this year we get to the top rate of tax, 1.5 million rand, 45% tax rate. So now people say to me, Matthew, give me a tax planning tip. Okay? That's why I don't hang up in pubs. People want free advice. Okay? Now, you say with that, stop earning so much. Okay, now why do you say that? Because if you are on a salary or a pension, you are subject to the employee's tax system. Your employer deducts the tax. 95% of the personal tax of South Africa is collected in PAYE, not provisional payments from traders. So your employer takes it off and pays it over to SARS by the 7th day of the next month. So now you go to your employer and say, listen, I've got some advice from Matthew Lester here. He says, we can reduce your tax, but I need you to cooperate in my letter of appointment. And that's where the human resources division completely closed down on you, and they say, we are not in the business of taking on the tax risk of our employees. Go get stuffed. And then you go over to the Income Tax Act and you think, oh, I'm going to claim all of these expenses in my own name. And the Income Tax Act has a turd there, 23M, that says you can claim nothing against your employment income except a couple of little items at the bottom and your pension fund contributions. So when it comes to tax filing season, take IRP5, put it on tax return, put it in, the money's paid, goodbye, there's nothing to argue about because there are no tax, very few tax deductions given to the employee. In the old days we used to make it all up, you know, home offices, da-da-da-da-da-da. We used to spend lots of time about what we could claim in the home office. Okay. Can you people, how many of you have got a job, employed? Okay. Now, do you ever work at home?
Yes.
Okay. Do you buy clothes to go to work? Those look like work expenses to me. So you should be able to claim a deduction on your clothes, your office. Look at everybody starting to smile. Okay. But again, in the Act is a turd, which says if you have an office provided by, a workplace provided by your employer, no home office deduction. Goodbye. Do you see my office in this business school? So what's the difference between my colleagues and me? I can claim a tax deduction. I'm working from home. I don't have an office here. So I can claim those expenses. They can't because I got an office. Isn't that awful? Now, if you look at that, if you just look at that, we've got to work a way around managing that. Because what the HR division will say is goodbye. We're not giving you any form of tax deduction. So, And you look at it, it's disgusting in some countries. Provide your own cell phone. But what are you using it for? Work. So you are paying after-tax money, taking after-tax money to pay VAT on a cell phone that you are using for your employer. Is that right? Right, we've got to find a way of managing that. Because there are all sorts of things in the way. What they are trying to do is to force your gross income onto your tax return, drive it higher and higher and higher, to drive you into higher and higher brackets. Okay? And they're very successful in doing that. That is part of the Trevor Manuel success story, was to find every major form of tax deduction. Cars, medical aids, home office, you name it. They all went out in the Trevor Manuel era. They were all destroyed with sniper provisions in the act that threw them out, driving you into a tax table which now starts to go up and up and up. Okay? So we are saying, we are looking in a business at all sorts of people. We are looking at our staff, the biggest stakeholder of all. He's got a tax problem right down the bottom of this thing. He's not getting helped. And we're not looking at how we can help them. How can we help those staff? We're going to make some progress on it today. And then, is there anything we can do about the wealthy as well? Okay? And then you look at it by number and weight. This is your lower level worker. He has a tax problem today, as well as your higher level worker. We have to be open in the board to all of those opportunities. Okay, and there are the numbers of it. And there's the future outlook. We've discussed that. It's going to get even higher. That would be a very good point to take a coffee break. Huh? I don't know where that tick has gone. It must turn up. I mean, has anybody seen a clicker left in here? A pointer? No. Okay. Coffee break.
But why is it then on the slide that
over 100 something is here.
Wow.
Sorry.
No problem.
It doesn't matter where you like outside of the room of this town. So like this is like a harbinger of debauchery.
Just don't tag it on.
Yeah, exactly. And now she's gonna now the girlfriend's gonna see.
Now he's about to have a real problem.
If the girlfriend understands, she can just say it, but
You think? In a rest? That's all I'm saying.
but it's a serious issue.
Doc,
Peter?
how was it?
How was what? Don't believe everything I say.
That was phenomenal.
beach there.
I went home, man. Couldn't sober up.
Adumlan.
Eh, unjani? Yebo. Akodora.
Impilo ayikho. Sesule age. If all that fun.
I don't know some medical background.
Eh?
Somebody with some medical background.
What?
Say what?
It doesn't care who you are, like. Yeah,
You're not really making money yet. It's an expensive.
Oh, that's true.
Look at this, it's only like been a week.
Yeah, exactly. It's just about that.
And you've got another one coming.
Yeah, there's another week coming.
Just imagine by the end of next year how much money they're going to be doing. A couple grand. 10 grand.
I'm telling you, you're gonna be walking with 2 cups of
Vodka and Red Bull.
You can just
No,
go.
it just shows you how bad
There's no limitations.
No limitation.
You must see the other class at
older
the end.
you are,
It's maybe like 4 people.
more people.
Like a small little list, not a whole board.
Or else we are really being strict in applying the rules, eh?
I'm going to
That's
Sorry,
good.
guys.
That's good.
Lunch.
Hello. How are you?
It takes it is known. But there's still a queue.
But tipile kancane. How old is it?
No.
60 something.
Yeah, no, they tried down in 2006.
Long time. Or retire when you want.
Yeah. Actually, I think he's, I would say,
Is what?
I would say he's half as tired. Just,
Ah, full carriage.
no.
I wonder that's the problem when you stay at home.
Yeah.
You get all quicker.
But again, like the other goes around a small place like this.
Yeah.
You won't have any social life. You don't remember what's the last you don't remember.
not as successful as your
You don't
Everyone.
Oh, there's one up for it, yeah.
Okay, mine is a hold up. I'll know later what to do.
I'm not the natural.
Not the nature one, so, and I don't see, that's my mom. That she takes in money, I said, that keeps your social life. But now, this social life will be less and less.
Not that you really want to.
No, and now it's not that we now we start because my parents. I stopped being I couldn't come when I was
No, she did.
This is his own jurisdiction.
Oh, yes. How's the secret?
Everywhere you go.
Is it?
Senegal is even the way to it. Is it?
Telling what else?
Is it the way to live
Okay.
Really?
Then African way.
the white way.
I am just going to rust.
Start windscreen.
Oh,
It's an action.
I mean, like it's like Spanish stuff.
it's
And then it's got like this
And the country is saying from 0 to 189.
now I'm like
0 to 189. From 0 to 189.
Because we've got people that who pay their crowns.
Yeah.
If that is the case, we would tax it those people who pay their crowns. Okay.
Then the grant is a different category. I don't call it
It's an income.
and then they say
in the form of grant.
around
It's an income.
But in the form of grant.
It's an
and then
income.
it's like stumble around.
No.
Yeah,
So many things that
yeah.
I used to
I don't know
hire
how
people
I don't know how to
to
measure
do
some sort of
the
because
cost of something.
Yeah.
So we're the tax law.
yeah,
Yeah.
something on trial.
Yeah.
No, that's a mistake. And
These people are just
Thank you.
I don't know, I think people know who they depends on. So they're like,
way of
they're
going to the tax if you
not
want
a chance.
You pay just
Imagine they would
a salary that is
not be afraid to take it.
and you push all the profits into the company because the company is taxed at a higher.
No, but they're not.
And that's the way of treating it. You pay yourself first and you're not taxed. And your other money is coming in the company is taxed.
I'll be real.
Therefore, you say, if your company is not making money, if your company is not going to tax, if your money is not going to tax, you know that you should tax your company because that is a and it sticks in. That's how people do. How many of those do you make?
Then now you is tax
Yes, it's clean.
It's good.
You are saying about it. This company employs many apps. And everyone goes with
Yeah.
very tough. And you're saying the company with less skills. If you're saying that you show my skills, if you're saying that people will show my skills, then you're taking the company should be that's another way to say I'm showing skills.
Don't you have skills?
Sometimes you need to but they always get achieve. I mean, yes, they're seeing that money to have to do a check.
Then I did very good.
And
Come on.
come
Come on. Yes.
have a long distances.
ASUN. ASUN.
you're not friends with them. Maybe that's not a name. Who's friends with the now we're playing FBI. That's fine. That's fine.
Right. Seeker, will you type everything up if I take out the line pro and use it on this computer for 5 minutes? I just want to show something from that discussion. I just want to take the line pro. I'll just put this onto the line pro for a second. Onto the projector. So I just wanted to cut this one for a moment.
And he does it Marlene.
Okay, tell me.
Okay, now, just copy that down. Let's see if we can make somebody some money in 5 minutes. Should do it. Budget 2017 unbranded. Okay. Just while we're starting up, first piece of useful input I got back was over Zero at tea time, or at coffee time. Why do you use a pie chart? Why don't we take 500 people? So many, out of 500 people, so many would be this, so many would be this, and land up with one wealthy person. Okay? So that was very useful. Let's just see if we can. I just need to go down. Page down. Okay, another thing that came up from T, and it's relevant. Let's throw it in now in tax management. Oh, okay. Where is it? We have immediately said that tax management is not only about the corporate tax. Let me just put this up so that we can record it. We have immediately said that tax management is not only about the corporate tax, it's also about the stakeholder tax, your employees. And look what Thomas Piketty is saying, okay? To maintain a competitive edge in a rapidly transforming knowledge economy, countries need to invest more in quality education. Not even minimum wage schedules can multiply wages by factors of 5 or 10. To achieve the progress, education and technology are the decisive factors. Okay? Now, that's coming from the man himself. Now, if you look at a thing like that, and if you're on a board, that is the type of out-the-box thinking. If this guy is saying that, what's a board doing about it? And a board has learned since the Mbeki era that government is driving the bus, and the problem of the fees crisis is government. They must deal with it. That's what we pay taxes for. That's what they'll tell them. And interestingly, Julius came up with a lovely idea. He is a bit of an out-the-box thinker. In the height of the fees crisis, he said every listed company should give out 10 bursaries. The only problem is 10 is far too little. Okay? But now, let's take Julius's idea and saying, hey, maybe you think he's a fruitcake, but there's a way of doing this. Let's have a look at it. Okay? Now, what is the issue in the post-school training budget? We send 77 billion rand a year in South Africa on training. Number one, vocational continuing education and training, 9 billion rand a year. Okay? Now, look at that and we say, what the hell is that? That is one form of spend. The next thing is skills development levy. You go into a company and they are deducting 1% of payroll to contribute to the skills development fund. It amounts to 15 billion rand a year, coupled with the government expenditures, 21 billion rand a year. And companies don't even know what it is. You can reclaim half of it back to use to train your staff. If you get it right in an employer, the entire cost of your MBA in this classroom can be paid by SDL, through the SDL system, if you know how the SDL system works. Does the board know that? No. So the opportunity is wasted. Number one. We then have NSFAS. 15 billion rand a year. What is the cutoff for claiming NSFAS? What's your family income got to be? 150,000, right? Thereabouts. Does anybody know how to claim NSFAS?
Yes.
I would say, if you know how to claim NSFAS, just set it out and communicate it, because if you are a matric student, even if you've got what it takes, they don't know where to start in getting NSFAS funding, right? There are some at university, part of our bad debt crisis at Rhodes University at the moment, I can tell you this, it happened last year, okay? We dropped our minimum initial payment. Rhodes University survived for years that we used to have what was called an MIP policy of 50%, minimum initial payment. When that dropped to 10%, everybody ran off to a loan shark, got the MIP, or from their family, and arrived. We were suddenly left in enrollment last year that we didn't have, we had people arriving, here's my MIP, here's me. No accommodation. We had a humanitarian crisis on this campus last year, in February last year. Roll that on 10 months, and no further payment has been made on the MIP, and the student who has come from a disadvantaged educational background and can't cope is failing. So now, they're facing exclusion from the university and a bloody great big bill. What are you going to do? You're going to join the fees must fall. Now, wouldn't the problem have been solved if we, first of all, educated everybody how to get to NSFAS is a start. Then comes the university subsidy. The problem with the university subsidy is that it does not look at the income of the student family at all. So the surveys are showing that 57% of that subsidy is going to the rich. So we mustn't grow that. The idea is to grow NSFAS.
Yes.
Because NSFAS is a targeted intervention. Right, and then we build more universities. Now, what's interesting in that is, now business board, is that of interest to you? Yes, that's huge. Ongoing development. Right, we saw it yesterday. Take an interest in your board, put him on an MBA, claim it back from CETA. Okay? What I'm doing with KFC, I'm going to be lecturing with KFC on the internet later this year. What have I got to do with chickens? I don't know. Okay? But I'm saying I'll produce a KFC video about how do you get in a NSFAS loan. Okay, wait, we're going to come to discussion in a minute, because we haven't finished yet. Now, in starting with the whole student fees thing, can we please explain that? Where you are. Right, next. Who goes to university? Understand South Africa's income deciles. The poorest deciles to the richest deciles. Okay, now, I remind you, I'm going to come back to the slide in a minute. Oh wait, I don't have it on here. Okay, the poorest decile. Now I'm going to go back. There it goes back. So those are in groups of 10% each. In yellow are those that are outside of the problem. Their problem is they can't get to university in the first place. Their matric doesn't get them there. So We've got 1 million students that this concerns out of a population base of 25 million people needing education. And that is the reason you can't have free for all. Because you're targeting this enormous resource, okay, at the expense of the majority who don't even get to university. Okay. Then you look at who is at university. They are in green. 50% are in the richest decile. And down here, how many of the poorest of the poor are going to university? Nothing. Do you see the problem? Right. And who does NSFAS service? Remember, I told you the other day, on your income decile, decile 10 starts at 140,000. So NSFAS has to service deciles 1 to 9. 90% of the population qualifies to goes through NSFAS. The last 10 starts at 150,000. If your family earns 150,000, can you afford a university? And at 600,000, the top of the missing middle, the top start of the top 1% of earners in South Africa. Can your family afford university? No. But the missing middle are left out. What is, now you get to the next question, what is the common factor of the missing middle? They're employed. They have a job. That's why they earn between 120 and 600. They have a job. And businesses say, well, you sort it out. Instead of saying, hang on, now wake up, I might make you some money in the next 2 minutes. What about employer bursaries? Can an employer give an employee a tax-free bursary? Answer, Section 10(1)(q) of the Income Tax Act says, you may give an unlimited bursary to the employee. The only thing you have to do is pay it directly to the university. You can't give the money to the employee and the employee pays. You have to pay it. The employer has to provide a bursary to the employee. So you renegotiate the tax package and you say, instead of paying you 500,000 Rand a year, I'll pay 400,000 Rand a year and I'll pay the university. Right? Which means that at least you are getting your furthering education on a pre-tax basis. So instead of your annual cost being 100,000 Rand a year, it's of pre-tax, it's actually 60. That is legal. You take it to the HR director and say, install that. She'll say, that's salary sacrificing, there's risk in that. Bullshit, she's using excuses not to do the job, right? But now go further. And we say, hang on, there's a second leg to 10(1)(q). It says, you may provide a bursary to an employee relative, i.e. child, etc. Okay? And the thresholds for this have been increasing. And in the budget this year, they say, if the employee is earning less than 600,000 Rand a year, you can give a tax-free university bursary of up to 60,000 Rand a year. So shouldn't we be saying, the employer pick up the missing middle? They are your employees. You are responsible for their education. And why are they working for you? Because they want to educate their kids. Ask every working mother, why are you working? It's to educate the kids. So legally, I can say, well, at least you don't have to pay it after tax money. Okay? And then I look at that and I say, gee, there's also another thing in this. What is the skills component of the BBEE scorecard? spend on universities, on university education. So not only is the employee getting a score, but so is the employer. He's getting BBEE spend and points. And he can potentially claim it back from the seat as well. And let's go further. Let's just dwell into this a little bit further. Below university level, you can give a tax-free bursary of 20,000. So I can say to an employee, look, I can't afford to send your kid to St. Andrews. And 20 grand a year tax-free bursary, that's going to do fuck all. Okay? That'll keep them busy for a weekend. But, Graham, a government school, Rondebosch High, Grey in Port Elizabeth, they are in this area. So what are we saying? In your governance, you're needing to think wider. I've got a problem. If South Africa burns, I don't have a business. NSFAS is there to deal with deciles 1 to 9. They're not my employees. Decile 10 is my employees. My responsibility is to take care of my employees, in as much as I need to give them a medical aid, in as much as I need to give them a pension fund. Their biggest concern is their kids. So, there's the framework for a bursary fund. And it's not all at the expense of the employer. There are mechanisms to get there. Go and find them. So what I'm saying, and you can read it, I think I've put the article there, in your, I put the article up in the pack. So what came out of this year's budget is an invitation for business to get involved in this thing and help. And businesses should be, that's why I've written it in King's corporate report. I've said, boards of directors, look at this thing, there's an opportunity here. Okay. What else can you do for the employee? I can't claim a deduction on a tax return. But your employees are using your cell phone. You're making use of the employee's cell phone. Then it says in the Tax Act, if you provide computer technology, cell phones, all of this stuff to your employees, there is no fringe benefit. So, employer, please provide the cell phones. And don't give me that shit that the staff will overuse them, because you can put a cutoff level on them. There is a cell phone plus 600 rands of airtime and so much data. And it's built into your package. And when you've used it, switches off, you're on pay as you go. Right? Now, let me show you something else while we're playing this game. Watch how the incentives come in. You go and you buy a cell phone package. And on the bottom of every invoice is what? The VAT. So you are paying tax on cell phones. If your employer provides you with a cell phone, and it's the employer's cell phone, they can reclaim the VAT. 14% discount. And employees are buying the stuff pay as you go and paying through the roof. Whereas the employer on a bulk contract can get it at half the price. Now that is the type of idea that we are looking for. That is what we are saying. A board is there to provide out-the-box thinking with controls to say, yes, there are risks. Identify the risks. Manage the risks. But don't let it stop you. Okay? And that is where the modern tax guy comes in. It's not about how much money I can schlep off to an island in Mauritius or whatever that other bullshit is. It's about, hang on, there are aspects of the Tax Act that we can use. Nice, eh? That's a type of thought. So you can pick that sort of stuff up. There are other ones. Can the employee afford a medical aid? No. Not a proper medical aid, it's too expensive. Absolute bottom level, 1,500 rand per person per month. And the government rebate is a couple of hundred. So what is to stop going back to the old principle? A company clinic. We're great big, I was in a big building in Joburg, one of these ones that won a Green Award. I say, what do you think? I look at it and I say, well, I'm going to have to go through a lot of traffic to get here. You're confining your employees to 2 hours a day in their cars just to get there and back. That's just number one, but put a peg in it. You can sort that out maybe with a flexi time policy to go with the building. You're not allowed to come to work more than 3 days a week. Huh? You will work from home 3 days a week. Time, green, more productive. Work that with the cell phone policy. Okay? How big a building do you need if the people are only coming to work 3 days a week? Okay? So then we get bulking up on offices, use of common areas. That sort of stuff can really save. Okay? And then I said to them, that's interesting. Where's the clinic? They've got a gymnasium there. They've got a fucking Banting restaurant. We're all going to get fit. And what happens when they get sick? So now you say, instead of a medical aid, we have an in-house nurse. People come in. If they've got a cold, we can give them the right medication to keep them off a cold. We have a visit of a company doctor twice a week who can monitor what's going on. The big emergencies, we will insure that through medical insurance at a fraction of the price of a medical aid. Now, is the benefit of an in-house company clinic treated the same as a medical aid? No, it's not. It's a tax-free fringe benefit. Okay? So it's out of the tax system. Bang now. And the economies of scale that you can get out of that by just saying, there's thinking out the box. This is what King is wanting us to do. Okay? What can we do for them? And Branson comes back to it. I'm not very fond of Beardy Branson, but there are some pearls of wisdom. How did you do it, Branson? I looked after my staff. That is his golden rule. I looked after my staff. So there are just a couple of bits and pieces about some ideas of how we're thinking. Out-the-box thinking with this thing can actually become quite fun. Whoa, Sika, wait, governance MBA. I think I found it.
It was there if you hover over it.
If I hover over it. Not a fucking helicopter pilot. Okay, so do you see the type of, part of the problem that we've got into in South Africa is we've lost our ability to think. We're just saying we've got terribly negative. Right, so now we go back to, yes?
Sorry, I have two questions. Just with regard to the breakdown of the expenditure in South African education, what's more troubling for me as well is how much money is going to the TVET. So the number of students at universities is roughly about 1 million. There's only about 800,000 in technical training colleges. And that ratio is completely skewed in terms of long-term, again.
Yeah, and I don't know the answer, but we have a commission of inquiry, which so far after 2 years has written 8 pages. Okay, and they've made the proposal that the education budget should double, which is not constitutional. Now, this is what happens when these pearls of wisdom come along. That is not constitutional. And in the first 8 pages of this shit that they wrote, you look at that and you say, we can't afford that. Then they say, the NSFAS debts must be recovered by SARS. Is SARS there to collect debts? No. And you will see very much later that SARS is not allowed to do that in terms of the SARS Charter. So they've proposed something that is not legally achievable.
But SARS has already started with this.
They are allowed to give out information. They're not allowed to collect that debt. It's illegal. I'll show you later. SARS official comes to me for a student debt. I'll give him a finger. I'll show you how it works later. Yeah.
Sorry. And then a follow-up question as well. With the bursary scheme, why are companies not doing this?
Because it's too much fucking hassle. Okay? What you are looking, I mean, does that seem logical? The whole act is structured around it. I've just published a paper on it, and I've put a copy in your paper, in your stuff, about that's how it's done. Every municipality should be doing it. Okay? Not only the private sector. That's what it's there. Imagine if we can move people around, okay, and open up opportunities on the basis of the employer getting involved. So, yeah. Right. But now what should also be happening, when you look at also in the blame game, the university itself. Our university should be promoting that. Does everybody who comes to Rhodes, before you even come here, front page, before you fill in the forms, let's explain all of this to you. If you are in NSFAS, you go to NSFAS, there's the form you've got to fill in, there is the whole process put out for you, follow it all the way to the way that you get in the door. So we've got some proper educational instructional material. From day one, first click on the Rhodes website is how you're going to pay for it. If you're in the missing middle, go to your employer and show him this video. And if you're at the top, okay. Right, now.
I'm sorry, I just wanted to ask, if there is such like benefits from the campus, which obviously they are not doing, what is then the use of these sitters? Because part of these sitters...
Well, you see, this is another thing. You are quite right.
Yeah.
The seaters are a disgrace, I think. And the seaters have their current mandate runs out next year, 2018. Has it already been extended?
Yeah, because there was uncertainty.
Yeah. So now, what should the Higher Education Commission be saying? Where's the money? Are the seaters spending it right? I mean, this is how mad we all are. Okay? Now, so there's a lekker digression and an example of tax management. It's to say it's not only about the corporate tax rate. But now let's go in and explain the tax game. Right. Now, this will be in the exam. It was in last, it's my favorite. Absolute favorite. Explain the tax rate. And don't use the last year's paper because it's changed again. Right. Now, what you will see is there are the three forms of entity. An individual, a trust, and a company. There are only three forms that you need to worry about. There are insurance companies and mining companies and things like that, but you can get a nerd to tell you about them. For every 100 rand that they earn, how much tax do they pay? Is the first question. And the first thing that you have to analyze there is their income capital or revenue? Now, the tax nerds get off on this debate about tax capital versus revenue because in the old days, capital gains were not subject to tax at all. So let's give an example. Mark Shuttleworth, right? Phase, first African in space. Now, Mark Shuttleworth is an interesting example because firstly, he sold his IT company. Secondly, he actually got paid. There were lots that sold into IT companies in return for shares, and then when the NASDAQ meltdown came in 2001, they lost everything. They went from nothing to billionaires to nothing. Shuttleworth sold, and he said, my price is cash. And he got 3 billion rand. Cash. And because it was capital from the sale of his business, and before it was before capital gains tax, he paid nothing. No income tax on it at all. And it was before dividend tax as well. So he put 3 billion rand in his back pocket. Right. He then spent $20 million with the Russians to blow him into space. He could have taken a couple of politicians with him on a one-way ticket, but he didn't. Okay? And he came back a hero, a South African hero. Mbeki appointed him to committees that he was working with. He was at the opening of Parliament, the Sona address, and hey, man. A couple of years later, he got pissed off about South African exchange control. And eventually he had a complete froth and he left the country. And he now lives in the Isle of Man, which is a tax-free haven. And on departure, he went to the Reserve Bank and he said, I want to disinvest from South Africa with all my money. And the Reserve Bank said, well, you can go, and our levy for taking all your money with you is 250 million rand. Yeah. 5%. And he said, I'll pay it, but fuck you, I'm taking you to court. And he followed it all the way through the Constitutional Court until he finally got a zap sign from the Constitutional Court, you will pay it. It was constitutional. He said that the amount was not constitutional. Exchange control was not constitutional. Which is not a sustainable proposal to make in South Africa, because everybody's money would fuck off if we didn't have exchange control. So that's the story of Mark Shuttleworth. If Mark Shuttleworth made that money today, the same thing 10 years later, he would earn 100 rand. 80 rand of it would be taxable as a capital gain. Apply the 28% tax rate of companies, and he would pay 22 rand 40. To take it out of the company, he would pay a dividend tax of 12 rand 93. In total, he would pay 35% tax instead of 0. And the state would get $1 billion. And we could send some politicians into space or build some houses. Is that equitable? I think that's equitable. Okay. The DA says we shouldn't have capital gains tax. My view is, well, what are you going to replace it with? Okay. Now, that leaves you to what you call in tax the inclusion rate. Line 2. There. And the inclusion rates have increased. So, on capital, you only talk inclusion rates on capital gains. Do you see that all the revenue gains are 100% taxable? A capital gain is a windfall. When you sell your house, when you sell your business, your trading profits have always been fully taxable. Okay? But now the important thing there is to see that for non-natural persons, that is companies and trusts, the inclusion rate is 80%. When the inclusion rate comes to an individual, only 40% is taxable. Now that is incredibly important in financial planning. Why? Because if I earn interest is revenue. You pay tax on all of it. If I have a share portfolio, I only pay tax on 40% of my gain. Okay? But it is also incredibly important in looking at all of this, in understanding the 45% tax. Yes, the 45% tax which emerges this year on the individual here That is only paid from 1,05 million. So, in the context of what we're talking about with my retirement plan earlier today, if I want to create a pension income to live in luxury in retirement, I've got another mouth to feed. The receiver. He's going to take off my pension. So I'm saving to pay it back to the receiver. Okay? Because if I earn more than 1.5 million, there's very little difference on my age and whether I'm a pensioner and whether I'm not. However, if I can get my income down to 250,000 a year, I will pay a lot lower inherent tax rate. So what the mistake that South Africans do is that they stick themselves out in the crowd. My example the other day, I go and earn money, I pay 45% tax, I pay 14% VAT on the dog food that I carry home, and then they shit on my deck. Right? Who's the fool? Those things are lying in the sun down at Kenton this morning having a wonderful time. Where's the incentive to work? And that's where you get into the Lather curve, which says that if you push the tax too far, people will become demotivated, they'll get motivated by tax evasion, they'll do all sorts of other funny things. And where is that point where you're pushing your tax too far? Right. But when we got to the budget this year, this 45% tax rate was not enough to make the grade in tax, to make the budget that we need for this year. They needed more. And do you also see that on revenue income, individual is paying more than the company? So the adage then goes, when in doubt, form a company. Okay? So if I was trading as Matthew Lester C. Proprietary Limited, the maximum tax that I can pay is 28. It doesn't get higher than that. Whereas in my own name, it's 45. Now there are provisions that can limit what I'm doing through a company. That is, I want to go and put my money in a company. I've got it in my company, I've then got to spend it. I want to go now out and get pissed. I can't, I've got to take the money out of the company. I've got to declare a dividend. So, if you take it out, there is the dividend tax when you take it out, which brings my corporate tax rate up to 40% when my maximum marginal rate is 45%, so that you equate the two. All right. Now this slide, please, I'm spending a lot of time on this slide, it's important. So, old days, people said, when in doubt, form a company. Because companies always had the lowest tax rate. But if I'm building wealth, I'm building capital gains. And I've got a far higher capital gains tax rate than I have if I pay the tax in my own name. Right, now, you will meet these turkeys in your life who will say, we have a family investment company. My wife and I are directors. Used to be very popular, particularly in the Western Cape years ago. Right? Well, that guy should buy around, he should get a medal for paying more tax than he has to. Because he's got 35% tax rate when he could be paying 18%. It's changed. And so the number of family investment companies have dropped off because of the introduction of capital gains tax. So we have seen the death of the family investment company in general. Okay, so that's the first guy at the bar. The second guy at the bar comes up and says, nudge, nudge, what a dickhead. He should have been like me and formed a family trust. Okay? I mean, in Natal, they've got more trusts than they've got people. You've got to have about 4 of them before you can send your son to Hilton. Okay? It's socially the thing to do. I'm a trustee of a family trust. Okay, and we'll talk about a trust in a moment as to what forms it and what does it and how it's set up. But now, the trust tax rate is higher than the individual tax rate. So you're saying, oh, so do you want to pay more tax for the privilege of having a trust? It's changed. It's evolved. It was fine before capital gains tax came along. It's changed. Trusts today have the disadvantage on both sides. They have the highest inclusion rate, the same as a company, and they have the highest tax rate, the same as an individual. And why do people keep them? They say that they save estate duty. But what we've seen here is that if I live to life expectancy, there's going to be fuck all left. So who's going to pay estate duty? But then you see how it changes again. What entity, may I ask, is not? No. I can't make trade with a not-for-profit. It says not-for-profit. A pension fund. A retirement fund. Okay? The very solution problem that we want for this whole problem over here is called a retirement fund. Okay? And what tax rates do retirement funds have? And if I contribute to a retirement fund, what happens? I get a tax deduction. So now we have this ridiculous debate, and it's great fun because I love stiffing it to people. It's a good way of stirring about their trusts. I say the modern trust is a retirement fund because of retirement fund reform, which we've been working on for the last 4 years. So what we've forgotten is there's a fourth column to this, which is the retirement fund. Now, what, am I blowing your brains here a little bit?
Yeah, you know, I'm laughing because the reality, or at least what I'm exposed to of the trust fund and the retirement fund is that when this union called marriage fails.
Oh, wait a minute. You don't want. You're going to keep the class. If we're going to go into the issues of marriage, we're going to be here until next Sunday. Okay, before we even get onto the Tax Administration Act. Right.
That's true. That's
okay.
Away from it to open trust.
Well, people. Okay. Let's deal with that because it is important in your lives. And let's try and bring some. People say that if you have a retirement fund or a trust, you will have it easy in a divorce. You can say, I'm here, I've got fuck all, go away. Right? Mm-hmm. And in the past, yes, that used to happen. But one of the things that's received a lot of attention in South Africa in the last 10 years is divorce. And the overriding principle when you marry anybody, this will also be in my book, is that if it comes apart, as far as possible, everybody is supposed to be left in the style to which they are accustomed. Okay? And this can be very interesting. Because traditionally you have the working male who is then exposed to an alimony claim from an ex-wife to keep her in the same style to which she was accustomed, house, car, etc. Okay? Distinguish an alimony payment from a maintenance claimant. A maintenance payment is the payment for your child. And their marriage doesn't come into it. If it's yours, you're going to pay. Okay, don't worry about how you were married.
Yeah.
Okay, that goes to maintenance court. However, if your spouse is working and got lots of money, you don't pay alimony. Because she's got her own money. Now that, just think about that. Okay? Think about a couple of other things in this thing. That people say, oh, high society divorce. The big divorce lawyers in Johannesburg, Gundelfinger, Brian Kahn, these type of people. Okay? I'll kick his butt down the road. We get those dads who says, my daughter got married. I got my lawyer to do an anti-nuptial contract. And if that guy puts 1 foot out of line, I'm going to kick his ass right down the street. Have you heard dads talk like that, right? Okay. What is the reality of a divorce in South Africa? We don't play LA law. You have to come to a divorce settlement agreement, which is then ratified by a court. If you can't come to an agreement, technically, you can have a contested divorce. Now, when you see the divorce roll at the High Court down the road here, okay, it's on a certain day, and they're going through them at the rate of 3 minutes per divorce. These are the parties, there's the agreement, it's been to the child court, court order. Done, because it's signed, sealed, and delivered. It is an uncontested divorce. Once you have a contested divorce, it's get in the queue. It will take you at least a year to get both sides before a judge. And what's going to happen when you walk in there? After you've spent all of this money on the advocates and everything else, what's the judge going to say? Please go and settle this outside. You guys come to an agreement. To try and get a judge to make a decision. Not even Mandela's divorce with Winnie got that settled. Okay, not even Mandela got there. So when you hear all this LA law stuff about a divorce, I'll give you some divorce advice now. Okay? Let's summarize some divorce advice. Okay? Number one, before you even get married. Okay? The number of marriages has dropped by about 1/3 in the last 10 years. More because it's socially acceptable to live together now. It used to be called living in sin. We are now cohabitating partners. Okay? We have the same rights in tax and as a wife. In the Tax Act, a cohabitating partner is called a permanent relationship, and you're treated the same as married. So don't let that put you off. But what that doesn't extend to, and make no myth about this particular woman, the idea of a common law wife, just because of the fraction of time that you've been living under the same roof, which you might have in parts of Europe and particularly in America, where there's actually a sort of days present test, okay, that makes you deemed to be married for marriage purposes. That doesn't apply in South Africa. And women, particularly in South Africa, get fucked up with this, because when it falls apart and somebody takes all your things and your accumulated earnings, it really is vacua possessia. Possession is 9/10 of the law. If you've got a joint bank account and somebody runs off with it, goodbye. The contents of the house, everything else. So if you are shacked up, if you are going to shack up with somebody, the first thing that you look for, okay, is an indelible pen. You build your own estate. You have your own bank accounts, your own investments, your properties, and if there's anything valuable right around the house, you write your name on it. Okay? It's mine, I paid for it. Okay? Indelible pens. Okay? So that there's no problem on the dust up. Okay? Now we're going to get married. Now there are various ways of getting married. And you can achieve it in an afternoon. You just go down to the courts here. Okay? And we're seeing that happen more and more today because fewer and fewer priests will actually marry people. Most people are married in court first because the priests are saying, I don't want to take responsibility for this shit. Go and do it in court and we'll pretend that we did it in a church afterwards. Okay? Now we get married. Now you want to get divorced. If you want to get divorced, we separate. Until we have then your child rights and your interim maintenance, or Rule 42 interim maintenance order, you have to keep paying. You get to the final divorce order, and unless it is agreed, a judge is not going to give it to you. So you have to agree. Urban legend has it years ago in Johannesburg. There are a lot of these high society divorces, where high society lawyers and all the rest of it had a complete go between. And they finally got it to one item. This couple, when they were young and the sex was still dirty, went to, when they went to Venice, and they went to a glass shop, and they bought a crystal bull as an ornament. It's about this big, beautiful work of art, apparently. And when it came to the divorce, they could agree about the kids, they could agree about the dogs, they could agree about everything, except for this fucking bull. And he said, I paid for it, and she said, I brought it home in my suitcase, it's mine. No settlement, contested divorce. And the night before the divorce hearing, the bull broke into 1 million pieces. And the divorce was settled the next day. There was nothing to fight over. But know this principle in South Africa, it's not LA law. If you think you're going to, you get the, do you know that the lawyers actually sit there on Monday mornings waiting for the calls? All divorces start on a Monday. Particularly the first Monday in January. There's nothing that causes more divorces than a Christmas lunch. Okay? Everybody go. So now, going back to this, you have got a family trust or you have got a retirement fund. They are outside of your estate. And you think because of that, you can give somebody the finger. But the other party is advised, just don't accept the offer. You've still got a contested divorce. So go away and think again, because I'm not signing. And by the way, I know that you've got a family trust. So go and talk to your trustees and come up with some money. Or you don't get a divorce. So what happens? I think in reality, trusts actually aggravate divorce cases. They're like Viagra to lawyers. They see a trust and they just think, here comes the money. So be careful. All right? Just remember that it doesn't always settle it. And now we get the disadvantage of the higher tax rate. Why am I saving? Why do we do financial planning? We do financial planning because for 20 years you are going to live without a job. You have to build up a fund. We are not saving for our children. We are saving to survive retirement without landing on our children. They can have whatever is left. If you're saving towards that and you do it in a retirement fund, you do it tax deductible and income tax free until you retire. Why would you want to go and form a trust or a company when there's a purpose-driven vehicle there to do it, a retirement fund?
Are the foundations the same as companies?
No, watch out for another issue. Foundations, NGOs, and all the rest of it. Sheepers, we could go on about this for a week. Those are philanthropic. Philanthropic is a big word for charity. If they are to be legally exempt charities, they have to comply with the provisions of Section 30 of the Income Tax Act, which means that no individual person can benefit other than for a market-related salary. So you can have an NGO with millions of accumulated donations, right? It cannot award it to any specific person. If the NGO is wound up, the terms of the NGO have to be that the accumulated fund will be distributed to another registered NGO. It can't go to a beneficiary. Now, since Dickens and Oliver Twist, we have had all sorts of shenanigans around charity. People profiteering out of charity. Please take it for the purposes of this morning, an NGO is a tax-exempt entity. But we are talking about doing business here, and they can only be used in the context of charity and philanthropic activity. Okay? All right. Half-hour tea break. Thanks.
You are indeed giving
Something different.
us the